Our stock, or should I say stocks of the day, because they are related, Domain, it's downgraded its guidance with housing market conditions deteriorating further since its AGM in November, reflecting the challenging market conditions, and it's now expecting first half earnings to come in around $48 million, though it's expecting an improvement in the second half. Given the second half upside, it's forecasting only single-digit deterioration. Domain saying December month-to-date listings are down more than 50% in Sydney, 37% in Melbourne. And off the back of that, Nine Entertainment's first half earnings before specific items is expected to be around $370 million. However, it has reaffirmed its operating guidance. It's saying its shares of gains and cost discipline is offsetting a softening and challenging market. Now, of course, Nine has a 60% shareholding in Domain. They're both off significantly today. And Adam, can we say perhaps these are two companies that are canaries in the coal mine? It's all about advertising here.
Absolutely.
Is this a reflection of perhaps where the economy is going at the moment?
First thing to get cut on any corporate budget will be outdoor advertising for one, but then two will be that advertising or advertising spend. And you're absolutely right, that canary in the coal mine is that if they don't think that conditions are going to be as good as what they were last year, or even going to get a little bit tougher, I think you will definitely see the advertising revenue slowing down. And something with like a Domain, look, it's all about ad spend. It's all about how much you can. The real estate agents are putting it onto the website and those kinds of things. So I think they're going to really struggle, especially with those revenue or those cost out. Potentially, it's a as Henry said, a tale of two halves. Maybe the second half of next year we might start to see a bit of an improvement, but a lot of water's got to go under the bridge before that. So for me, Channel 9 is a sell, and Domain, I don't know. I've never liked any of the. I don't like any of the advertising stocks at all. So or media stocks. So
why is that?
Well, one, it's their revenue is really only one single stream of revenue coming in. Netflix has got an ad-supported offering now, so a lot of advertising dollars going to flow to that. And generally, it's just not a space that's really excited me a lot. So I'm going to say a sell on Domain as well. I think REA is better business. REA is getting hit today as well on the back of this downgrade, and quite substantially. But the way to play REA is to buy News Corp, because News Corp owns 60% of REA.
Yeah, similar sort of story.
Same sort of story.
Yep.
And I think News Corp in the US has got a lot of levers that they can pull with the Dow Jones Newswires, all of those kinds of things. So I think that's a better buy if you want to get access to that sector.
All right. Henry, do you agree?
Andrew, the only thing I'm surprised about is the market was surprised about this, to be honest.
Good call.
Let's face it, property has been on the nose for the last 2 or 3 months, big time. You can't keep raising interest rates at the pace that the RBA has been doing, and other central banks, and be talking about housing crashes and all this sort of stuff, and then be surprised when Domain comes along and says, you know what, our listings are down. I mean, come on, guys. I mean, if you're an analyst and you're doing Domain and you haven't spotted the trend, you are an idiot, and you should not be given a Christmas bonus at all. It is Mr. Captain Obvious, this one. And, what's, I think, interesting is this is a downgrade for Domain, not a downgrade for Nine. It is a downgrade for Nine by virtue of the fact they own 60% of Domain. But, you've got to have been blind Freddy to be walking around your suburbs at the moment and realise that listings are down. People are staying put, because if you refinance or you buy a new house, unless you're mega rich, which people are still doing that, then you're going to cop a massive, massive hit in terms of your mortgage repayment. So what do? You stay put. You don't sell your house. And if you have to sell your house, which is the worst case scenario and something Australians avoid at all costs, then you're certainly not going to be doing the premium listings and being up there. You're going to be trying to cut costs where you can. So I can't believe this has really surprised the market. Sometimes the market, you know what? Sometimes the market is really, really dumb. and it just waits to be smacked on the head with the bleeding obvious. And this is the bleeding obvious. I wouldn't be going anywhere near Domain, and I wouldn't be going anywhere near REA while the RBA is raising rates, and we've got this massive cliff next year in terms of interest rate payments and the big jump that a lot of people are experiencing. Why would you buy stocks that are geared to housing? Really?
All right. Well, there's the herd, and there's Henry.
Do you think he likes the story? I think he liked it.
Yeah, it's a super buy.
Maybe a super sell. All right.